Good day and welcome all. My name is Davis and I'm managing Swedbank co-creation space here at Swedbank Latvia, where we support early stage fintech and sustainability startups. And I'll be your host for the upcoming hour and a half. We began the year by talking about how accelerators can leave a lasting impact on sustainability driven startups. But today we would love to move on over to fintech and talk about what impact can startups from this field have on our futures. What are the trends and how have they been doing during this period? So previous year, we saw several record-breaking funding rounds for fintech companies in Europe, including Swedish payment service provider Klarna that reached 10 billion valuation last fall. And UK's based company Checkout.com that was valuated at 15 billion after a fundraising round in January. Right next door, we saw TransferWise rebrand themselves as Wise as they are getting ready for an IPO in 2021. And but all of this can be read in the headlines. And today we wanted to focus on the startups that we have already made the name for themselves, but are yet to make huge waves in the future as well. And we believe that they have a potential to do just that. And I believe that down the line, the startups that we have here today could become the next unicorns. And that is why I'd love to invite you to listen closely what they have to say. Though before I invite the first speaker to join me on the stage, I would like to ask you, our audience, a question for which there will be a certain correct answer. And if you will be the first one to answer correctly, then you will receive a delicious meal by the end of this event, as usual. So write the answers in the Facebook or LinkedIn live stream comment section down below. So if you're ready, the question is as follows. How many Latvian fintech reports we at Swedbank have created so far? So we will check our winners right after our first speaker. So get comfortable as we are about to invite the first speaker on the stage, but don't go too far from your keyboards as you should use the opportunity to ask any questions that might help you and others. So write them either in the Facebook or LinkedIn live stream comment section down below. We will cover the questions after each keynote and the end of the event on the panel discussion as well. So without further ado, I'd like to welcome our first speaker, Liudis Kanepienis, co-founder and CEO of Ondato. So Liudis is an entrepreneur with over 15 years of experience in digital banking, fintech, AML, KYC procedures, licensing, and legal issues. Welcome to the stage, Liudis. Hi.
Hi,
Happy
Davis.
to have you here. Happy to have you here. So the stage is yours, and yeah, take it away.
Yeah, thank you, Davis, for the nice introduction. Hi, everyone. My name is Liudis. As mentioned, I'm the CEO and the founder of Ondato. So I have an opportunity to present myself, what we do at Ondato. So I will start with a brief why. And the problem we see is that lots of the fines are paid by the banks and financial institutions for anti-money laundering, know your customer, and all this stuff, procedures and violations. And that's what was actually happening even before. And many businesses face the demands on the KYC and anti-money laundering as such. And of course, there are lots of the solutions to handle that. So we took that as a challenge, and we came out with a solution to create that as the one single platform that could actually take care on all the process of the customer onboarding, data validation, and monitoring, and of course the ongoing due diligence, what is the most important in the daily life of the financial institution. And how does it work? It's actually like 3 single steps from the user's perspective. Just client onboards, the data is being gathered, and then for the all the early warning and due diligence and reporting processes in the backend for the financial institution. And basically, we are supporting now all the methods of the customer onboarding. It can be digital onboarding online with the photo or the live video stream. Then we are also handling the offline onboarding, which is not relevant in this period of time. And then, we gather all the information about the customer. Of course, the customer submits his own information about himself. And here to mention that from the day one, we support the individual and business customer KYC processes as such. And of course, to stay on the top of the game, we have to ensure the complete immunity to fraud. Then, of course, to follow all the compliance procedures, and of course, to adapt to any kind of changes. In the meantime, to be with the stream of no-code infrastructures for our clients and partners. And basically some key benefits that the clients already face and that they say they have. So of course, reduction on the onboarding costs, then the spending on the compliance procedures and processes, and of course the personal, then zero fraud tolerance that is coded from the day one, and in ability to open the business account in less than 5 minutes. And basically some of our client base that, because we started from the Baltics, and we're one of the key leaders here in the KYC solutions. Swedbank is also one of our clients, and for sure we have more of those outside the Baltics as well. Some achievements that we already made. So we started with interaction with the Mastercard Lighthouse program that local banks here are supporting. Then we were awarded for the German awards as the Fintech of the Year. Then, of course, we attracted some financing, and we just announced the closing of the seed round by the last day of last year. I personally, and the company as well, we were awarded as the Fintech Leaders of the Year. So the company was awarded, and myself as the person here in Lithuania. And we were shortlisted as the future unicorn by Digital Europe. Currently, we have a team of more than 120 people. Of course, lots of developers, KYC specialists, and different kind of people and competences that we have within the company. On the other hand, we're always now hiring, and I believe the other will talk about that as well. And we're now established in 4 locations. So 2 of them are in Lithuania, and we are headquartered now in London, UK, and we have also the site in Gdansk, Poland. So that's shortly about us, and I'm looking forward for the nice discussion and, of course, questions from the audience that you will have. Thank you very much.
Thank you, Liudas. Thank you very much for your presentation. And as I see so far, we don't have questions, but I think that we will have during the panel discussion. And I'm excited to hear a bit more from you in the panel discussion later on. So thank you very much for joining and sharing. So before I invite our next speaker on the stage, I would love to congratulate Emils Dārziņš on being the first to give the correct answer on my previous question. So my colleague Zana will get in touch with you to finalize the details of your prize. And yes, Emils, the correct answer was 1. So last year we created the first ever Latvian FinTech report, and we are planning to create the second one in just a few months. So if you are a Latvian-based fintech company and you would like to be included in this year's Latvian FinTech report, please let us know by checking the link down below in the comments section, where you will be able also to see our last year's report as well. So, okay, next up, I'd like to welcome on the stage Vilve Vene, CEO of Modular Bank, having built and digitalized Hi, nice to meet
Hi.
you. Happy to have you here. Uh, she has digitalized banks and financial institutions since the 90s. Vilva is true financial IT pioneer, developing innovative financial technologies well before fintech even became a tangible concept. So welcome, Vilva, and happy to have you here.
Thank you, Davis. I'm really excited to be here today and tell you a little more about Modular Bank and about share also our story, why and how Modular Bank was born. I share my screen now. Modular Bank is next generation core banking suite. It means that it's technology, it's not the bank. And please get familiar with our team. We have Yuri, Rivo, me, Ove, and Jan. It's founding team. And our founding team together have almost 90 years of experience in building solutions, platforms for different banks and financial institutions. I think that that's our biggest strength, our team. Before I start to talk more about Modular Bank, I'd like to share with you a story, how Modular Bank was born. And for me personally, it's really heartwarming to be here today talking at Swedbank Seedtalks, because my journey started in Hansa Bank in 1992. And you probably know that Hansa Bank was the predecessor of Swedbank Baltics. Yes, in 1992, when I joined, there were the bank just founded with a big ambition. And this ambition was to build most modern, most innovative bank in whole world. But at the same time, as there were first years of Estonian independence, we couldn't even dream about buying banking platform, ready-made banking platforms from the West. We just didn't have money. And we made a brave decision to build the platform ourselves. And of course, it was a lot of learning, a lot of challenges. But finally, very soon, it turned to our luck, because without having legacy technology on the board, we were able to build a bank with all branches online from the very beginning, introducing PC banking to our business customers in 1993, online banking 1996 for retail customers, and Hansa Bank got the biggest in whole Baltics at the end of 90s. Me and a couple of my colleagues, we decided to leave the bank in 2002 and start the company Icefire. Icefire is a banking technology company. And during Icefire's history, we built platform systems from scratch in very, very different areas of banking, starting from core banking, transactional accounts, till insurance, leasing, card management, etc. And during this journey, we helped more than 15 financial institutions, every time using our knowledge about banking products, banking business, regulations, processes, everything, and combining it with the most proper technology available on the market at that time. But the world was changing, and finally, the time arrived when we could productize all this knowledge, capture all this knowledge, experience we had, and put it in the product. It was summer 2018. We were sitting together with our founding team, and we were discussing that, okay, cloud computing has evolved already, and banks and financial institutions started to trust cloud, and also fintechs, first fintechs were already successful, and also technology, first companies offering technology for banks, especially on lending side, were appeared. And we built very quickly the first prototype, showed it to our customers and potential customers, and they said, okay, yeah, that's something we really like. We'd like to use it as a service. And that was how Modular Bank was born. In the beginning of 2019, we spinned off from Icefire, and our founding team dedicated fully to Modular Bank. But now let's go to the Modular Bank. What Modular Bank is? Actually, it's your banking platform in a box. And there are some very important features what are important when we are talking about next generation platform, because we all know platforms coming from the past, which are usually big and monolithic and really complex. But Modular Bank, yes, Modular Bank is modular in design. We have different capabilities. Actually, we offer capabilities for all areas of commercial banking, retail banking, and also business banking. We have multi-currency accounts with all configuring possibilities, with transactions. We have lending, covering all lending flow. We have separate module for assets and collaterals. You can add to the lending to start to offer secured loans. We have credit and payment cards. We have capabilities to connect or integrate different payment schemas. Of course, we have deposits or saving accounts, and then we do financial accountings for all those instruments. But we follow very strictly domain-driven design. What does it mean? It means that every module I just showed you is totally independent, and customer can choose exactly those capabilities they need. If they need to start lending business, they choose lending. If they like to start to issue credit or debit cards, they choose card module. But all those modules are from if you choose more than one module, then those modules are capable to talk to each other over the queues naturally. You haven't do anything to achieve that. And a second very important feature is that Modular Bank is built as API first. It means that all our capabilities are available via APIs. It means that it's very smooth and easy to integrate Modular Bank with any external system you have in-house or any other external. And also, it's very easy to build your own delivery channels on top of Modular Bank capabilities. Then Modular Bank is cloud native and offered as a SaaS. Cloud native means that it's built for cloud, but we are also cloud agnostic. And that's important because you can choose that you run it on your private cloud, on-prem, or you can choose any of public clouds you like most, or you can use Modular Bank as managed service offered in Modular Bank's own AWS instance and also managed by Modular Bank people. And of course, we are compliant by design. It means that we follow very strictly or security requirements, GDPR, and also we store all data points needed for regulative reporting. Who are our customers? When we launched Modular Bank, we focused mostly for incumbent banks. And it was essential because for long years we have used to work with incumbent banks, and we knew very well their pains. And if you are looking a little bit out from Baltics to the Western Europe, for example, or also Nordic, you see that many banks still use their core banking platforms, which are coming from 70s. There are big monolithic systems, undocumented, code layered one layer on top of another. And we also know a lot of digital transformation projects banks have been initiated in the past to get rid of this legacy. But usually, if you start to implement T24 or Avalok or any of those big, little bit more modern systems, then those projects take years and they cost hundreds and hundreds millions, and very often they fail. So we in Modular Bank believe that we can help incumbent banks to compete with newcomers and fintechs and neobanks in time to market, and also open the services in very different ways. So we offer gradual approach. It means that you can choose the business line or features you are the most urgent to transform. And for example, now we are working with one big bank from Nordic, just implemented Modular Bank them only for their consumer lending. And when we finish that, it's very soon, it's in a month, then we probably go to another business line. But it means that you don't invest a lot in the beginning and you achieve your targets very quickly. And in our journey, we dedicated one even more interesting customer segments, and it's industry verticals. Today, everyone is talking about embedded finance already. But at that time, it wasn't so common yet. But we got a lot of prospects in very different industries: energy sector, telemedicine, of course, retailers, wholesalers, etc. And all of them want to embed to their own services financial capabilities to grow their revenue basis, as well to tie customers more tightly to them. And as Simon Tyler has said, that finance is not a car anymore, but it's the fuel for a car. It exactly means that we can't talk about financial services anymore as fully dedicated services, but they will be embedded in the future probably to any service. And of course, we love to be, and we already are, the backbone of new fintechs, newcomers who are coming out with very different ideas, totally new value offerings, and really innovative services. Here we are, Modular Bank. We, in the beginning of 2020, we had 7 people. Now we have 54 in 2 locations, mostly in Tallinn and in Berlin. And we have on board 16 different nationalities. And we all share the view that that diversity is a ring that is it's really the backbone for success. Last December, we closed our first late seed investment round. We raised 4 million. Till that, we funded our company from the revenue we already earned, because we have been earning revenue from the day one. And we believe that new generation core banking market, it will be huge in next 5 years. Thank you.
Thank you so much for sharing, Vilva. It seems that also for you viewers also are keeping their questions for the panel discussion later on. But yeah, please don't go too far as we are here to hear from you a little bit more during the panel discussion. Yeah. And once again, thank you very much for sharing.
Thank you. Thank you for listening to me.
Yeah, of course, of course. Okay, a reminder for the viewers, you can also leave your questions for the speakers. Write them either in the Facebook or LinkedIn live stream comments section down below. So as our third speaker, I would like to welcome Taavi Tamkivi, CEO of Solve. Taavi has been working in the financial crime fighting field over a decade. Having been a part of Skype and TransferWise, his experience let him build Solve into the platform that it is today as it is. So welcome, Taavi. Happy to have you here, and glad that you were able to free some time to share your story as well.
Thank you for inviting me here, and I'm super happy to share my story with all of you. And I'm especially glad about the fact that all the participants in today's discussion are somehow related to each other. Like we're geographically close to each other, but also like business-wise or collaboration-wise, I think we have interacted with all of us, each other. And so it's like a nice ecosystem that we're building here for the fintechs and for the regtech. So that shows definitely the strength of the Baltic bridge or Baltic chain that we have in these days.
Absolutely, absolutely. Okay, the floor is yours, and yeah. Thank you.
Yes, I have also some slides to share with you, and I want to talk about beating financial crime and how I'm approaching to this with my company. So the company called Salve, which I founded, but before that, I worked many years at Skype, which was the first European unicorn back more than a decade ago. But I was fighting financial crime and fraud globally over there as a data scientist. I learned how to treat the massive data sets. Then I moved on to next big unicorn, which back then was tiny, TransferWise, where I learned the global complexity of the compliance requirements of different countries of the world, AML challenges, how the money laundering works, how the prevention of the money laundering should work. And based on these two learnings, I founded my own company, Salve, which is again focused on fighting financial crime at this global scale, and we're trying to sell the knowledge and capabilities that we have gathered over the years to other financial companies now. And also, I'm quite active in this shaping the European and Estonian and European financial sector. So I'm a board member of Finance Estonia and also a European Fintech Association, which is like quite new association that joins European Fintechs together, but they're like really active in the European Commission level. So for all the Fintechs, I recommend to take a look at this organization as well, which is designing the European standards now. But what the team is about and what we're doing, like we were founded. I founded Salve company 3 years ago, and so far we have raised a bit more than 3 million euros as a funding, and our team consists of like more than 30 people now, engineers, product people, customer people, and so on. And we're fully based here in Estonia. But actually, like we have also like people from 4 different continents who happen to end up being in Tallinn or Tartu. And of course, like there is huge impact from TransferWise and other network like bigger unicorns around us who have brought in huge talent into these countries we can use. And then basically we have gained a lot of strong AML crime fighting people and a lot of strong engineers into that team, so to be able to build these complex technologies for the customers. You might think why there is elephant on my slide. The reason is that every year criminals launder up to 4 trillion euros. So just imagine that's the amount of money that's getting laundered every year. It's about the size of the German economy, so which is like one of the biggest economies in the world. And the point is that the money laundering itself is not the bad, but the bad thing is that if we're not stopping it, we're allowing to happen different crimes which are generating this dirty money which has to be laundered. So there's like illegal weapon sale or drug trafficking on the streets or human trafficking, bringing people into Europe or into US, wildlife smuggling, which is happening largely thanks to the fact that money laundering is so simple in these days to do, and that's driving us to stop it. And like actual banks and fintechs are trying really hard to stop the crime, but the problem is that criminal networks interact globally. They're working as a networks. They see what's happening in different regions, in different banks. They share information with each other. But banks and fintechs very often operate in solos or silos, trying to spot suspicious activities and patterns using only their own data, which is like so little very little in the global scheme. And the amount of regulations is growing really fast. Like loads of things that you need to do as a bank or as a fintech to stay compliant. It's getting more and more difficult every year. And then financial institutions globally are spending about $200 billion each year to be compliant, but they fail to detect at least 98% of the global dirty money. Only 1 or 2% is being detected for that investment. And it's Europe is the worst place in that regards. That out of the whole compliance spending in the world, about half of that spending happens in Europe. So like European banks and fintechs spend practically the most to stop the crime, but it's not very effective. And the companies are largely struggling because there are no right tools to beat this crime, because the tools that they're using now are inefficient and are not meant for the crime fighting actually. So and what we're doing is like we're building a platform, a crime fighting platform for the companies, and it allows. It's not a single product; it's a list of products, and it allows different players in the financial market, banks and fintechs and starting companies, insurance companies, and so on, to make financial crime prevention much more effective and efficient. And very briefly, like what is this platform including? There are like in-house products or in-house tools which deal with the customer risk scoring. Each single customer gets their own personal risk score from the AML point of view. There is a sanction screening. Every customer needs to be checked. Every transaction needs to be checked against sanction lists, politically exposed persons, adverse media lists, and every transaction has to be monitored against the risk scenarios. And if something suspicious happens, then this case needs to be triggered and investigated. But also we're building a bridge which is connecting different banks and fintechs of the region and in the future in the world to exchange data about suspicious customers and about suspicious transactions. And this is maybe the most innovative part, which I would like to talk a bit further. But now we're covering pretty much the whole Europe. Numbers-wise, we're growing about 3 times per quarter. Absolute volumes are still quite small, but we're growing. Like we have 2 banks using us on day-to-day basis, and 18 fintechs across different countries of Europe. But also this data exchange platform that we're now testing has brought together 4 largest banks in Estonia. Many of them are present also in Latvia, but we're working only with Estonian entities now at the moment, which I will talk about later. And then basically the idea of the bridge is that it allows information sharing between the banks and the fintechs, and to exchange and enrich data when it comes to suspicious transactions, suspicious users, customers, suspicious events, which actually helps them to build a holistic picture of what's going on around the networks of crime that might be attacking them. And this is like really innovative approach, because that's the first big step for financial institutions. Nowhere else in the world, no one has done it successfully yet. Netherlands is trying something, Australia is trying something, but in our region, like we're literally the first ones. And what it means is like we have brought together the 4 banks, but also the local supervisor, FSA, and data inspection agency to figure out what is the legal basis, what is the technical requirements, what are the use cases for exchanging the intelligence. And now we're in the middle of releasing the product, and then like all the participants are super excited to see what is the exact benefit which is going to come out from that, because like preparation of this stuff has taken a lot of efforts actually from all of us. And the point is why I'm speaking about this here is that if we're doing it only in Estonia, there is some benefit, but the benefit is limited. But what we're looking to do is to extend the data sharing use cases first across the Baltics, because like we are forming one economic, like financial economic one segment over here, which we can test different solutions, validate, show that them work, and then we are able to grow these new fintech and regtech approaches across the Scandinavia, across the Europe, and then across the world, hopefully. So like we're like small incubator here in Baltics altogether. That's what I'm really hoping to get out next from here. And it's not sales talk, because like many countries and the Financial Action Task Force, which is actually driving the global AML activities across the world, they are noticing us already that, okay, there's something cool happening here in Baltics, like let's keep an eye on them, and like maybe we can learn from them, which is like huge recognition, thinking back 3, 4, 5 years ago when Latvia had a lot of AML problems, Estonia had a lot of AML problems, but now we have learned a lot. And when I'm saying we, I'm thinking about local banks, local regtech, local regulators, central banks, and so on. So that's my story that I wanted to share with you. So the beating financial crime is something that's driving that team, and I'm super excited to see that how the different companies and government institutions of our sector are also getting more and more excited about this mission, and then we're working together to achieve that. So thank you for that time, and I'm looking happily for the discussion part as well, which you can hold.
Thank you, Tavi. Thank you very much for sharing your story, and I can wait to hear more from you also during the panel discussion later on. So as our fourth speaker, I'd like to welcome on the stage Tuomas Niperts, co-founder and CEO of Jeff app, which is a loan brokerage app for the unbanked population in Southeast Asia. Launched just in 2020, Jeff app has shown impressive growth, and just a couple of days ago, we received news that they have raised additional 1 million. So welcome, Tuomas, and congratulations on the great news. Happy to have you here.
Thank you for having me. Thank you for the congratulations, and I'm truly honored to be in a pack of definitely more seasoned and mature fintech entrepreneurs. And yeah, funny thing that Tavi said about this small community and ecosystem building, because yeah, he actually happens not only to be an amazing fintech entrepreneur, but one of the angels that had our backs in this most recent funding round. So there's that.
The right people have joined us today, I see. So, okay, the floor is yours, and yeah, welcome.
Thank you. So, yes, as Davis already mentioned, Jeff goes under the tagline loan broker for the unbanked. And not only we are, unlike the first three speakers, more focused on consumer side, well, actually being a marketplace, but we have also chosen markets on the other side of the planet to be your starting point, if you will. So this all started with some of our key team members working in other fintech companies in the past, taking leading roles, including myself. And as we started to have our experience with more, so to speak, exotic or developing economies and in other parts of the world, including Asia, we saw some big differences. So one of the things we witnessed was that in Asia, there are considerable difficulties for people to come and access financial services. And this number, according to latest World Bank estimates, can be as high as 1 billion people in the continent, in the part of the world more precisely. And when we started to compare things, let's say when a consumer or a borrower comes to a bank or a lending company in Spain or in Estonia, or when the same thing happens in countries like Vietnam or Indonesia, the second group gets rejected in many cases, not because they are bad as a borrower, but because the bank simply doesn't have enough information to do the credit assessment. So digging more into data, we discovered that around 70% of the population in certain emerging economies do not actually have bank accounts. Around the same percentage represented the amount of transactions that still happen in cash. But on the flip side, we also witnessed that there is a tremendous opportunity in the digital footprint that those consumers actually carry and possess. So what was discovered next was that not only you can do amazing things with this digital footprint and combine it with credit scoring, but some really smart and advanced people in the industry had started to achieve success within the banks or lenders. So what happened next? We agreed that there is a massive opportunity, that there is an incredible potential for this to become a market-wide solution, because that means that a single lender has to invest a lot of resources in developing this and getting the know-how and getting the people to give access to all this data. But on the flip side, if this was done at a centralized level with a centralized approach, the benefits are much, much, much bigger. So we quit our jobs. Some of us moved back to Latvia. Some of us were already here. And we launched Jeff, which is loan broker for the unbanked, that utilizes alternative data to boost financial inclusion. So how it works in a three-step way is that people come either to Jeff's website or to Jeff's mobile app. They sign up with Jeff to effectively create an account in a very similar fashion, like you would do it with any other comparison site or brokerage solution. In Latvia, there are some solutions. In pretty much every country, there is something like that. So when people give that basic info, we go forward, and Jeff says that, congrats, you can look at some options which are probably lower in terms of loan amount, or have certain other disadvantages. But if you give me more data about yourself, such as connect your Facebook account, connect your mobile wallet, connect your some other third-party accounts that we would support at the market, upload documents or give some smartphone permissions, etc., etc. For every new data source connected, you get to a higher level, and through that you get access to a wider range of different products that carry lower interest rate, offer more money by default, and have certain other benefits. So it in a sense becomes like a gamified process where user, him or herself, decides how much data they are comfortable to share, and based on the amount of data they have given to us, we can do a better kind of profiling, and through that we can try and kind of match this person with a wider range of lenders and banks on the other side. So it kind of becomes like a marketplace for us. So this is a quick glimpse about how the product looks. On our mobile app, we are going after a personalized approach, because when we think about that, and especially when we look at Asia, more and more the interaction goes to a messaging approach, whether it's, I don't know, your coworkers or during a taxi, or doing pretty much any other conversational interaction. So that's something that we wanted to do with Jeff in our app as well. As said, it's a gamified process with multiple levels on the app. And another thing that we learned last year is that it totally makes sense to combine Jeff with non-financial services as we go forward, because if you add let's say insurance offers or e-commerce discounts or some food delivery coupons and things like those, we add much more utility for the people to use our product, which means more data for us, which means more interactions, and it means that while we give more benefit for the user, and through that, they can stick around more frequently, we also get much more valuable insights to build a more accurate and more helpful credit score. And yeah, this is something that is not necessarily our hypothesis or something that only we believe in, but this is something that has been already often and widely validated by some of the market leaders globally, that credit risk, especially in those emerging markets, is heading away from the traditional financial data and expanding into these, new types of data points. And just to show a few, some of these are something that we are already tapping into. Quite a few of these are something that we are still working towards. But yeah, it can be things starting from your anonymized device information from your mobile phone. It can be anything related to your lifestyle apps that you would be using, or of course social media, documents, let's say like your utility bills or something like that you would be happy to share and upload, and so on and so forth. So, and yes, just in a nutshell, to summarize, for people, we give the improved chance of accessing those services while making it all convenient and personalized, and slowly building those credit history in background, which has been absent. Because another statistic to pinpoint here, around 90% of population in markets like Vietnam or Indonesia don't have credit history in credit bureaus. So that's a big challenge. And at the same time, for bank and lender partners, we just allow them to unlock new client segments, which means more revenue and then the bigger market opportunity, while at the same time helping them with conversion, risk improvements, and saved resources on applicant processing. So yeah, last year was our first year in the market. We did quite well in terms of recognition with different competitions and different coverages. But most importantly, we were able to go from zero in beginning of 2020 to approaching 400K annual run rate towards end of the year. And what's even more amazing for us is that we have been able to more than double that in the first 2.5 months of 2021. So yeah, the speed that we are running at is we are ourselves very excited about that. And yeah, as you have pinpointed, we are fresh out of a fundraise. We just announced a $1 million fundraise 2 days ago, and yeah, with that we are super excited to expand in Vietnam, which is our only market at the moment. We have started working towards entering Indonesia and then Philippines later this year. So yeah, we are very looking forward to repeatedly show that it is possible to build a global business at the other side of the world out of the Baltics. So this is part of our team. So another cool fact is that this picture was taken just a couple of months ago, and then we have grown the team by around 40% since then. Some, amazing ladies and gentlemen in Italy, in Estonia, in Vietnam, of course, in Czech Republic. So yeah, and as you see, we are dead serious about being cautious against COVID, but still, making all the pivots and adjustments. And speaking of the team, we are actively looking for amazing people on business and financial analysis and on software engineering side. So if you are listening, guys, my email is right here. I'm super looking forward to talk to you as soon as possible. So that's Jeff App. Thank you, and that be it.
Thank you, Toms. Thank you for sharing. First of all, love the speed you guys are growing. So we just heard some stories across fintech companies from Lithuania, Estonia, and now from Latvia as well. So thank you, Toms, and we'll see you back here in just a few moments. So the time has come for us to welcome everyone back to stage for the discussion. But before I do that, I would love to introduce you to our moderator, Aman K., who is a partner at Finch Capital. Aman has previously worked with Nordeus, Facebook, and Assel Partners, where he has actively involved in various technology investments, including Spotify, HouseTrip, and Halo. Apart from that, Aman has also been a board observer at Supercell and Super 8 Games. I don't know how about you, but I'm extremely excited to have you, Aman, joining us for this discussion today. So without further ado, Aman, welcome to the stage.
Thank you for having me. It was very, very exciting to be here.
Yeah. Thank you for being here. Yeah, as well. So before I give the floor completely to you, I would love to welcome back on the stage Liudas, Vilve, Tavi, and Tuoms as well. So one last quick reminder for the viewers. Also, please leave the questions that appears for you want to know about from the speakers. Just write them in the Facebook or LinkedIn live stream section, comment section down below. So Aman, happy to have you here, and the virtual stage is yours.
Fantastic. Hi, everybody. I am super excited to be here, and I think talking to folks who are probably, I would like to say, superstars in the Baltic ecosystem. I've heard of and spoken to a number of you actually before, and it's I'm really looking forward to this conversation. You know, the two main topics I wanted to talk about really kind of center around funding and obviously the impact of the pandemic, March, April time and beyond. You know, there are two very different stages of the pandemic and what happened to funding, at least from an investor standpoint. I think it's always different to hear from an entrepreneur standpoint how things are a little bit different. So talk about kind of a little bit on how that environment has developed. And then, you know, would love to dive into what's unique about this panel is, you know, the four of you are in verticals that are very, very important, and I don't like to use the word hot, but you know, are very well talked about in fintech, so to speak. You know, adding a lot of value both on the consumer side as well as on the enterprise software side. So, I think that'd be a good chance to kind of dive in a little bit deeper into your businesses, and then kind of finally round up with, you know, how you think about you know, your capital journey and the future capital outlook. You know, particularly kind of where you are, how you think about hubs being developed, hiring, and so on. So maybe kind of going back to the first topic and starting there, which is, you know, I'd love to start off with maybe Tom's view on this, because I think, you know, Jeff is an interesting space, right? You're focused on the consumer side, obviously, you know, giving consumers, you know, financial independence and exposure to financial products, lending products, and curious to hear how, you know, investors kind of view a consumer lending company in this time.
Yeah. So few things before I get into that. Two things actually about us, right? Number one, we started out really at the backdrop of a global pandemic. So you know, we quit our jobs late 2019 and went to market January 2020. And we all know what's the following timeline globally. And then the other thing, you know, most of our team, we are actually, you know, guys that have some experience but still relatively young. And then like we don't have any like big names or unicorns, something like that, you know, shows our credibility or stuff like that in our resumes. So about this, when, you know, we went out to raise our first angel checks, or with this recent round, you know, we didn't have those chips on our shoulder, and we of course faced a lot of skepticism that you're some, you know, 20 somethings in Baltics. How the hell are you guys going to be able, you know, to create a marketplace business on the other side of the world? And this, you know, so full disclosure, it was tough. It was really tough, but the silver lining there is that I think we've been able to put our, we've been able to walk the talk in a sense that was validated by this round being mainly covered by investors following on from the previous much smaller round. Basically, they expanded their tickets at a much larger valuation. So that's a good sign. And so this kind of, you know, it hasn't been easy, but I'm super looking forward when I follow up on the investor pipeline that we have accumulated, show the metrics we've been able to hit, and then hear what's the, you know, perception.
Yeah, no, very interesting point, and maybe Tavi, it's a good point for you to come in because you were also involved with Skype and TransferWise. I'm curious to maybe get your view on how your funding journey was, and I know you probably raised your first round before the pandemic, and then you did a raise in December, but how was that? Having come from an environment maybe a little bit different to terms of companies that are now worth billions of dollars.
Mm-hmm. Yeah, I must say that different founders are in quite unequal positions. Like I see how much work Tom's had to do in order to get his round together, and he's like a great business developer, sales guy, and he was like putting in a lot of effort actually to get his funds together, and I was doing maybe 1/3 of the effort that he did in my case, because it is true that if you, like me, I'm a bit less than 40 years old, and I've been working as a specialist, as an expert throughout my career so far. And people who are working as experts in the top financial or technology companies, they're building their network of people who trust them. And when your ex-colleagues are becoming successful entrepreneurs themselves, like it happened with Skype employees and TransferWise employees, they become investors, they know who you are, what you do, then it actually becomes super easy to convince them that, okay, you know who I am, what's the team around me. Of course, like if I would build something which is crappy and not relevant for the market, they wouldn't invest in me. But as you said in the beginning also, that this areas that we're all operating are quite sexy and attractive. Yeah. That's feeding the interest for the investors as well. Yeah. So for me, it was more about picking the angels and picking the VCs that I actually wanted to work, because the amount of offers that I got was maybe 3 times higher than I could accept, because like, yeah. I couldn't sell too much.
Jealous, I think, but it's I think kind of it's good to be in that position. Vilve, maybe to you, you raised a pretty big seed round, and I know you've been, you're probably a more developed company than I would say a seed round suggests.
Yes.
Having a lot of my colleagues spoken to you before. So
yes,
how did you go about kind of raising it, and maybe give the audience a little bit of a kind of background? You're not necessarily a seed company, although you did raise a seed round. You're a much more developed company than that.
Yeah. You're right. We were in the beginning, somewhere in the beginning, in between late seed and A, and but as it was our first round, we still qualified it as seed, and we started in March 2020. It means that it was the first COVID was just on his everything was closed. I was sitting in my country house on a small island, and we're like, okay, how are we doing that now? And me and my co-founder Rivo, we did it together, and it actually was a wonderful journey, because it wasn't tough at all. And I think COVID even helped in that sense that you could connect people. Otherwise, people are traveling and people are busy. But now you just contacted, wrote the email, and you got answer. Okay, let's have a chat tomorrow.
Yeah, that's amazing.
And yeah, that's just amazing. And in the beginning, maybe the interest wasn't so big, but the word was spreading. And as it was developing, we could close it already in August. But as I said, it was our first one, and we were really careful choosing the people we will work together, and we know that you can't divorce even. If you once decide, then you have to live with that and live together. Yeah. And finally we decided, okay, we don't go with those first investors we had already almost selected, but we really want to have someone who is really strong in industry and who can help us industry-wise, because as you know, core banking, it's not anything easy stuff. And we got on the board Blackfin Capital, which is a specialized fund for really for financial institution, financial services. And actually, we are very happy with the decision we made finally. but it was long journey. And so we started on March, and we finished in December. You see, it's almost 9 months. But now we are much more wiser, and when we start our next one, I think we started in August already, and we know exactly what to do.
Yeah, interesting. And maybe coming to Ludas, you're in maybe the fortunate position of kind of raising a pre-seed and a seed all in 1 year. How did that happen?
Well, so you see, it's all about the situation and the development and the speed of the development. So you mentioned it right. We are in the space where I wouldn't say it's like a trend or something, but it's just it's hot topic from the perspective that regulation is getting tougher and the problem is actually growing. And when we faced COVID. What does it mean for the environment that everything goes digital and basically the risks are just increasing? We have the development of the business basically faster than planned, and of course then we have to adjust all the rest of that. And the kind of recent fundraise was related just to that, to deliver the things to the clients that we have to deliver. That's already ordered.
I think one of you said you're always hiring, but you're also always fundraising in this business.
But I believe all the startups are always fundraising, isn't it? So it's a constant process. But you see, I can complement actually what Vilve said and what actually Tavi said. Let's say for us, and Tom's actually was right as well from that perspective, because we were always focused on the business. So on raising the business, on doing the business, and the fundraising was just a part of the process.
Yeah.
But to be honest, from my side, that was totally not something difficult or tough process or whatever, because even today with the COVID situation, all the interactions are online. You don't have to go somewhere. You don't have to, spend a lot of time for traveling and meeting people and all this stuff. And when you have numbers behind you, so it doesn't create any, issue with the fundraising. It's just a matter of then finding the right chemistry with the investors, and that's it. So from our perspective, that was not tough at all. I do understand why, for Tom's an example, that was more difficult because they started the business itself at the very beginning of the COVID. And of course, then there's lots of the questions, so you're now in Latvia and locked down and, then raising funds for the business that you will be launching in Asia. So that's different questions. But in general, this time is a perfect time to grow the business, especially like this type of we're all doing, and to fundraise.
Yeah, no, absolutely. Maybe one question to follow up on that. I think as investors, we can be a little bit kind of funnel minded sometimes, and whenever there is some event in the market, like the pandemic, we kind of run to a model where we feel comfortable with. So there was suddenly this, and there maybe still is this push towards recurring revenue businesses, right? Like let's find software B2B businesses that are recurring revenue. So, and rightly or wrongly, I think kind of that has a little bit of an impact on what that means for people you're talking to, and as founders, you probably need to kind of be aware of what your investor likes. Tom, did you kind of see? I know kind of it's existing investors that participate, but did you feel any of that, like when you were raising, or it was kind of already kind of too late in the stage for of the pandemic to really have an impact on you?
So if I kind of, how to say, got the question right about it's like about the recurring revenues. If you mean we are in a bit more challenging position than the rest of the guys on the panel, obviously, because we are we are very much driven by consumer interactions and then frequency, and this is one big mistake we kind of, not mistake, but thing we learned, that you can have a best possible loan comparison in the world, but by its definition, it's a one-off transaction.
Yeah.
User comes, he or she goes about the business, and that's it. So this, the kind of learning for us was that frequency of usage is a key thing we need to work on. Therefore adding these, non-financial services so that you add more utility functions. And as we, started thinking more about that, we understood that, those, let's say, repeat cohorts of usage and monetization are gonna, move us in this, niche of monthly recurring.
But you didn't see like a pushback from your investors saying, I'm only looking at B2B businesses, or I know you do have some elements of B2B in your business, but you know what I mean?
Yeah, I mean, about this investor pushback, only B2B businesses, we didn't necessarily see that, because we did a pretty good work on filtering out the first layer of which investors we tried to reach out to. But it was more about talking to European investors. Yeah, we don't feel comfortable going outside of Europe at this time. And then when you talk about the local investors, we don't really invest in foreign businesses at this early stage. So it was like chicken and egg problem, if you will.
Yeah, maybe it would be really helpful. Maybe this question is for Tavi. Do you think about metrics a little bit differently today versus maybe pre-pandemic, or I don't know why it would have an impact, but or maybe a little bit more focused on kind of unit economics or payback, or from an investor standpoint?
I think it's not coming directly from pandemics, but it's like the more practical mindset that has come to my mind, but also the investors' mind, is that actually companies should make some revenue, and the best money that's coming for the startup is coming from the customers, not from investors. And keeping in mind, it doesn't mean that we need to become profitable super fast, but something I learned again back in TransferWise times when we decided that okay, now it's time to become profitable. It was like way before the market trend showed that profitability is something important. How much actually it helped us in our further progression a couple of years later, when we were gross margin was positive. And that's the approach I've taken also in my case. I'm I'm taking care for the revenues, but also the cost, and keeping reasonable balance between them. And this kind of common knowledge tends to extend to other people's sales as well. Just something you asked before, what was it harder for Toms to raise money because of pandemics? Actually, maybe one interesting point is that actually, from investors' point of view, they should evaluate more the fact that life for the B2B companies has become easier. Companies like me, and I believe also Vilve and Ludas as well, 2 years ago, in order to sell to bigger organizations, we had to fly to London and to Frankfurt, physically have meetings, sitting in the bars in the evening or having coffees in the restaurant. But now the whole world is just behind one click. And large players in the market are in the weaker position because they need to adjust and reshape their own sales process. Whereas the small ones like us, it's like a bread and butter for us anyway. So in the consumer market where Toms is operating, it has been always the case. It's online or Facebook, LinkedIn, whatever. But in our world, in B2B, the life has become easier for the small companies, and thereby it makes lowers the risk of investment to enter into that space. So that's. But I haven't heard the feedback that much. It's something that I would have hoped to see more, actually.
Yeah, that's actually a very good kind of point to transition maybe into kind of the verticals that you all are focusing on. And maybe to start with Vilve, is a lot has happened in kind of the banking as a platform market, right? And I'd be very curious to get your view. Maybe starting off on the point Tavi was making is, you said you work with banks. maybe it seems like, how do you get these mammoth institutions to like touch infrastructure, change infrastructure that is so core to them when they are so scared of even, you know, downloading Zoom?
Yeah, it's tough in a way, because selling cycles, if we are talking about incumbent banks especially, these are long, and we have to, in our business, we have to keep it in mind all the time that selling cycles are long, decision processes are long, but still, I think it's moving to the right direction, and it means that decisions, I think some 2 years ago, decisions took even much longer than they do now, because financial institutions, they feel very well their pain points. And 2 years ago, they were okay. We are not fully digital. Our processes are partly manual. As there was in the beginning of COVID, a lot of talks that if you want to get loan holiday, you have to, even in peak banks, you have to import, etc. You have to wait for hours. But that's not normal. And what is happening now is that those newcomers, those fintechs who were neobanks and big banks, could look at them from top to down, that okay, they are not real competitors. They are becoming competitors. And those talks that we have to change something, transform digitally, I have heard last 8 years, I think, already from incumbents. They are really, they are the first steps that they are really trying to do that. And that's also why we are much more welcome to talk with them than we probably were some years ago.
Yeah. And I guess I'd be curious to hear a little bit more on the infrastructure side. So I think your name is very cognizant in the sense that it's modular, because I think one of the things banks were always afraid of was, you know, vendor risk, and, you know, I don't want to change my entire architecture. So, you know, the microservices game kind of came into play. So I'd be very curious to know whether, like, is that the right approach to go into, you know, some of these tier one banks that you're talking to, as opposed to maybe a full stack approach?
Yeah, actually, it's very important if you talk with banks, with whom you talk, because there are so many stakeholders, so many different opinions, and I think that we could never sell anything if we go directly to IT department.
Yeah,
because they are protected their world, and it's certainly not modular. It's coming from 70s, 80s, etc. They don't want to change because they don't know this new world. But if you go to the business owners, the heads of business lines, and we actually never sell modules. We don't sell as technology. We sell use cases. What you can achieve by choosing Modular Bank. And that's how things start to develop. Those business owners are going to the C-level, and then of course we have to start talking with IT. And in bigger banks, it's always important that you somehow get the people from IT architecture side, IT department side to your boat in the way that, okay, it's our common project. We are developing technology, but you can implement it, you can run it if you want on-prem. We are not taking away your work or your positions, but it's possible. It's possible to sell them.
No, very interesting. And maybe just coming to you on the RegTech side, on technology in particular, right? So I think there's been a lot of funding. I'm going not necessarily talking about the funding, but I would say more from a technology standpoint. How do you think about kind of what you do is different here, right? So there's an element of how quickly you can integrate and those elements of it. But I'm curious how your clients think about technology when you speak to them.
So, but you see, the main thing is that Vilve pointed very right. So we don't speak about the technology. So the technology is just to solve one or other task, and to ensure that it is done in the way that that's supposed to do. But we are talking, and yes, about the problems, the issues the institution has, the processes they want to handle, how they want to serve their clients, and this part. And the technology, to be honest, is not, it's already becoming a hygiene. And if talking about the things like, I don't know, ID verification in the market or these kind of things, so it will become just a just a hygienic things for everyone to have, and it will be a commodity thing. So it will be not something very interesting or something. Of course, we have developed lots of the things. It works really well and all the stuff, and then we can measure that against the others and everything. But it's actually not important at all. The most important is the business cases, the processes, how they work, how they has to be handled, and how to make it happen with the no coding, with the no interactions from the IT departments, and to enable those as quick as possible. So that's what we are talking about.
And sorry, go ahead, please, Tavi.
Yeah, just in general, I agree with that, but just to add some flavor for the new startups, still technology matters when it comes to discussion. Is it on-premises or SaaS product? And that might be a real showstopper for some companies, like people who can, or companies who can offer SaaS product where banks' data security requirements are not that strict. They are living in paradise comparing to the companies where banks require on-premises integration. And it's not about like, do I like your technology or not, or do I trust you or not? It's about their internal procedures. If they say that their client personal data cannot be sent out without these constraints, then you're spending 10 times more resources to do the integration in-house, which has a huge impact on the business model, your profitability. The whole business has to be different. The technology stack has to be different. So that's maybe the most important question of technology, which is coming from the bank's internal procedures and requirements.
So do you and you guys and do you offer on-prem? I'm just curious.
We do.
We actually, when we started to design the product, the first prototype of the product, then we knew that we have to build it in the way that it's cloud agnostic. It means that it can work on-prem, it can work in any cloud, because many organizations, many big banks also, they have already selected their preferred cloud partner, and it can be not AWS. And it means that cloud agnostic is, if you are working with banks and bigger organizations, I think that's the most important thing. And of course, it's more work. It's more complicated to develop technology in this way, but we have to do it, and we have done it.
Interesting. Tavi, you mentioned a little bit around data and not banks in particular not wanting to send data to servers outside of their architecture. There was a question on the chat as well to you around kind of what data sources do you use, and you kind of said their own transaction data is super important. Like how do you go about kind of convincing a fairly regulated organization to trust you with transactional level data? And like this is I'm guessing because you're in solving financial crime, like identifiable data. It's not like it's non-identifiable kind of advertising tags, for instance.
Yeah, exactly. This is one of the biggest challenges that we need to face. And if you think in the European level, we're all operating, all the financial institutions are operating under like three competing like legal spaces. There is AML, like which says what you cannot do, how to monitor and stuff. Even if you're not directly a company, then you still need to follow the AML regulations. Then you have the GDPR, like protecting privacy data. And then you have the Bank Secrecy Act, which is kind of not full copy paste from the GDPR, but like many similarities. And every time when I go to bank to speak with their data protection officers about sending potentially their customer data or transactional data out from their bank, I see how their head explodes, like virtually. So like, what are the legal paragraphs, arguments, why to do, why not to do, what are the technical requirements? So it becomes hugely complex. How I overcome this? There's like month of work, like explaining in detail, like allowing to do due diligences, providing tons of documentations, getting certifications like ISO 27000, SOC 2, whatever else. But also that's like a huge amount of detailed work, but also in parallel, we need to build trust. Like we are a small startup, like all our small startups, less than a couple of years old. We have raised, we're proud that we raised 3 million or 4 million, but actually, if we compare with the volumes that banks are handling, it's nothing, right? So like, why I still keep surprising few contacts that we have made with the banks, like how the heck they can trust this kind of tiny company. So the brand building, trust building is at least as important as going through this legal argumentation. And it is difficult in our space. In the same way, like in the consumer space, you have other challenges. In our space, it's like perfect product, perfect documentation, and trust building.
And so I'm not trying to keep you away, but it's a good transition to kind of how you use data, because I think Southeast Asia, so we invest actually in Indonesia, so I understand a little bit kind of the market dynamics there. And obviously open banking we kind of take for granted here in Europe is probably not maybe it is a thing, but it's not is not as big of a thing. How do you convince your customers? I'm guessing you went into credit scoring because like data transparency just didn't exist in these regions, but how do you convince your customers who've probably never given anyone their financial data to give you their financial data?
Yeah. Hearing what other people just now shared and understanding the conditions under which we operate, there is a considerable difference, to put it mildly. So yeah, as you said, Indonesia is a different kind of animal, and from our experience, we are yet to enter Indonesia properly, but from what we have at hand of information, it's not the most challenging either, actually. So there's two sides of this, and the two good things that actually Tavi mentioned about trust and about small companies versus large incumbents, and then the latter one having more difficulties, if you will. So when we talk about the user, it is all about keeping it opt-in, and then showing them that you are in control. You decide whatever you share or whatever you don't, and you see whatever benefit you get depending on the amount of information you provide. But actually, the biggest thing for us, like a revelation in the first year, was the big challenge is going to be on the B2B side, because banks in Southeast Asia, in those developing economies, they don't really know what an open API is in quite many cases, and they are used to receiving Excel files with clients' data and then operating on that. So we kind of understood that we need to start working with them by providing a service that they understand and demand today, build relationship and trust through that, and then step by step move to a better tomorrow, show them the way, and go to change in small steps. So put it in context. We start like a client provider, like a loan comparison service. After a few months, we go to them and say, hey guys, we can actually give you more insights about the people that we send you, so that we can help with the risk and conversion, and allow more deals to happen. And then through that we open the doors to the risk stakeholders and other internal departments that we wouldn't get access to without trust. And that's kind of step by step how we will pave the way to a credit score provided by Jeff.
Super interesting. Fantastic. Well, this was really insightful. I think maybe in the last 5 minutes that we have, I would love to touch maybe on Tom's your question, what is the future for capital raising, but also kind of general capital journey. And I think one of the key kind of themes that I at least feel is important for any ecosystem to flourish is, how good the angel ecosystem is in that region, right? And because I think at the end of the day, angels take most of the risk and are kind of responsible for the breeding of these companies. And you use the word mafia, and Tavi has probably been involved with the Skype and the TransferWise mafia as we know it over here in London. But maybe to start there and then move on to the rest of you, because I'd love to kind of get a sense of how things compare in Estonia, Lithuania, Latvia. Is it regional? Is it people think more a little bit broader Baltics? Is it a difference if I'm a Latvian entrepreneur or an Estonian entrepreneur, and from an angel raising perspective? So Tavi, maybe your sense on that.
Yes, it's like yeah, of course, it's very, very natural. The more unicorns you have in the community, the more angel money there is floating around, and I'm super happy to invest into companies of my former colleagues and or friends or people I see around, and definitely that's going to happen in Latvia and Lithuania also. Like as soon as your couple of first unicorns are properly established and done the IPO or whatever, so it's like very, very natural process actually, which is happening. A few years ago, I didn't realize, but this pattern keeps repeating. Like once you have cashed out some money, you have seen what your old colleagues are doing, and again, like as I'm acting also as a quite active angel investor, I am a bit worried, because if there are more unicorns coming out from Latvia and Lithuania, then you will have more local money to invest into hugely talented startups which are coming up already now. So it's like there's like interesting moment where the money from Finland and also I think from Sweden, but London is trying to enter into Latvian and Lithuanian startups as fast as possible before the local money reaches them. So it's like a bit of run competition going on, but yeah, it's like I saw this happening with Skype, and Skype funded like new companies, and TransferWise and Pipedrive and all these Bolt founders, they're funding new companies. Exactly the same will happen elsewhere as well. But yeah, now we're just using the momentum that they can. I'm lucky that they could invest into Toms and other companies over there. So.
Yeah. Do you guys any views on this? I don't know if it's related or not, but I saw you moved your HQ to London. Was kind of broader capital journey funding a thought of that, or was just more kind of commercial?
It's both actually, yeah. But if talking about Lithuanian angel community, it is, I would say, it is getting better. So it's still not, let's say, as good as in Estonia, and yes, lots of foreign capital is coming. On the other hand, still a lot of people see Baltics as a one single market, and we have a really good example as ex-Skype Mafia, startup Wise guys and their activity in the Baltics in general, in all 3 countries, and they have a really good impact because they're forming, let's say, the culture of this ecosystem and the stuff. Of course, some of the funds related with the European funds and the co-investment funds and these kind of players are also have their impact on the market. But of course, if you have to go for, let's say, larger investments, larger money and all this stuff, so for sure it's still, let's say, not so established ecosystem, I would say. Yeah, but it is getting better for sure.
Yeah. Do you have any thoughts, like where did you find your investors, and maybe kind of where you expect your next investors to come from? Maybe that's
yeah. We are always talking that, okay, what are you seeking from investor? Because we don't seek only money. I think it's pretty easy to get money. Also in Estonia, we have so many angels that we can pick it together. But yeah, and we are thinking now. We haven't decided anything yet, but as we are thinking about our next markets, because now we are mostly in Europe.
Mm-hmm.
But I think for a company like us, we have a lot to do in US, for example. And then sure, we are looking also to US funds. It's for us. It's very important that our investors help us to get into the markets where we want to.
Got it. Super. Well, everybody, I think we're out of time. I don't know if we have any questions. No questions yet, but I think we covered everything. But thank you so much for joining the panel. I had a great time. I hope you did too as well.
Thank you.
Yeah, thank you very much.
Yeah, thank you very much, all of you. And I think no questions because you covered a lot of topics. So that's great. And thank you for sharing your thoughts and jumping into more depth within different topics. And I think we touched quite a few interesting areas that we could talk hours and hours. But unfortunately, we have a limited time today. So I'd like to say once more thank you to Liudis, Vilve, Tavi, Toms, and Naman for the knowledge you were willing to share with us today. And let's give a round of virtual applause to them and for you to being here. And thank you very much for joining and having some time to jump in and share your stories. So so far we have managed to touch upon the topics of during previous Swedbank Seedtalks as well, topics as sustainability and accelerators upon the fintech landscape and funding nowadays. But don't worry, the year has just begun and we have plenty more up our sleeves. So thank you for joining, all of you that were watching us today, and see you at the next Swedbank Seedtalks. Take care and have a great day. Bye.